Good evening and welcome to the Australian Stock Market Show. Now, some buy into a stock that's on its way down simply because it pays a high dividend, only for the fall to continue and diminish returns. If you are looking for income and dividends are important to your strategy, then you're in luck, as tonight's show is all about the 10 best stocks that pay high dividends. First up tonight, we'll share our hot stock tip for the week before diving into our view on the sectors in the All Ordinaries Index. Later in the show, we're going to answer some questions on ETFs, gaps on stocks, and how you might trade them. We'll also share our analysis on stocks like Perpetual and many others. Now it's time to sit back and relax, as tonight will be jam-packed as we answer your emails, take your phone calls, and give you the answers to some of the most important questions around the stock market. Hello and welcome to the Australian Stock Market Show. I'm Gillham, your host for tonight, and joining me is Janine Cox, and we're Australia's most trusted stock market educators. Hey, Janine.
Great to be here tonight. And now, Dal, I know our viewers are eager to see that hot stock tip of yours tonight. You know, he's been so tight-lipped about this, so how about we get straight into it?
Good, you don't give me much time to talk, do you? You want me to get straight into the stock tip?
Why not?
Okay, let's go.
No mucking around.
No mucking around. Tonight's stock tip is, I'm actually going to be doing Domino's Pizza. Now, I know a lot of people probably won't be surprised about Domino's Pizza. I'm going to put a few little things on the chart here that I've got. I'm not going to show the fundamentals on this, but this is the whole history of Domino's, and you can see it trends really, really well through here. But what I'll find here is I'll put some little bit of analysis on this stock. Look what I did for the top 20 stock review that went up into Talking Wealth last Friday, and also some of the YouTube viewers that commented over the last 4 weeks got that private link to see that. Now you can see here the stock, I've just put on it the all-time range of this stock, and you can see here that it's come down to this level here at 43.32, which is 75% of its range, but it's also fallen 75% from its high there, and you can see that there, which is a really, really good, strong sign of a stock finding some good support. More importantly, this low here back in June at $40.75 is above that low there at 35.30. So if we see an upward move through here, which we're likely to see, or I think we are likely to see, I think we'll get some good rises out of this. Now, if it does break this level and goes through this 75% level, it's going to head down to about 90% of its all-time high. And if you look at its all-time high there, if I can bring it up, oh, there it is. Let me get it on, 167.15 or $167.15. If it does break that 75% mark, it will go down to 90. I want to show you a couple of other things, and I'll just take this one off, this layer off, and put this one on. I'll put a little bit of some work that, as I said, I did a lot of this work on those top 20 stocks that are in Talking Well. So if you are a Talking Well subscriber, you can go and watch that video still. If you haven't done that as a YouTube viewer, you've missed out on the opportunity now, because we had that for the last 4 weeks. But you can see here, we've gone low to low in 46 months, low to low in 50 months, low to low in 46 months. So it's likely that it's starting to start to move up. And you can see it's just come back to that longer term sort of momentum area. Now I want to show you the weekly chart just before we finish up. And looking at this weekly chart, you can see it just beautifully trends all the way down through here, and we're finding that little bit of support through here. So there was the low there at $40.75. That was on the week ending the 16th of June. It has 3 weeks up, and this week currently it just dropped down a little bit. It's dropped to 44.52, slightly below last week. It says 44.56. Last week was quite a bearish, or the last couple of weeks have been bearish on the All Ords. This is moving up. So what I've done on here is just used a basic trend line that we teach in my books in How to Beat the Managed Funds, and also my second book, Accelerate Your Wealth. And you can see here, nice trend line coming right down through here, moved up, closing once, closing twice above it. If you use that rule to enter into a stock, then it's already given you a buy signal. I think the safe entry point on this stock is above that low there at 48.46 when it travels through that level, but it does need to keep moving through here. This is only Monday and Tuesday of this week so far. So we do need to see a little bit more of a stronger move and move up. If it turns around and starts to come back down this little through here during the week, because we saw last couple of weeks the markets moved up during Mondays and Tuesdays, only to fall away Wednesday, Thursday and Friday. So at this point in time, that's why I'm saying just wait for it to get through that sort of level there at 48, 46. But I do like this stock, Janine. You got any thoughts on it? Other than what a fantastic piece of analysis, Dale.
Look, that was very nice of you actually, because you allowed me to sit there and have my cuppa.
You've got a. How did you get a cuppa? The boys must look after you all the time.
Well, I was ready early, so I had it sitting there waiting for me.
You did. So anyway, you got any thoughts on Domino's before we move on?
Look, I like the stock. It's interesting. I just was really intrigued by your analysis at one point, and I'm thinking, how did he find that? I'm like,
Look, I've got things up my sleeve all of the time, actually. And I didn't want, with the people that we've got watching talk this show, a lot of them are more investors, so I didn't want to go too heavy in the technicals and try to keep it that high level, but it is exciting.
I think you did well.
Now. So there you go. So that's it for our take on Domino's.
That's it for our weekly hot stock tip. If you have questions for us, call us on 0392909988. That's 0392909988. If you prefer to text, send your question to the number on your screen.
All right, to get things started, we've got some giveaways. Now, the first person to call into the show will get a free copy of my book, Accelerate Your Wealth. So make sure you pick up your phone and dial now. Now, the number you need to dial is 92909988. So pick up your phone right now. Tonight is the second week in the month, which means Janine should be bringing up the sectors on Optima so we can have a look at that. So how about we get into the charts to see the sectors on the Australian stock market?
Well, the sectors have been interesting, haven't they?
Hang on a second, we've got to bring it up first.
Oh, I was just getting so excited about that.
You always get excited.
Which sector's your top pick at the moment?
I want to say energy.
Really? Why is that? Is that because it's been the underdog?
Yeah, it's been the worst performing one, so I want to say energy, but
what?
But the other half of me says materials, and then the other half.
But energy's higher risk, so why would you choose that?
Because I'm a bit of a cowboy sometimes.
Yeah, but I mean, you've got to justify it. So which stocks in energy do you like?
I don't have to justify anything.
Yes, you do.
No, I don't. It's a top secret.
Okay. Well, look, I'm looking at, you've had this set to the week.
I said I'd like to say it. I didn't say I would say it.
Okay. So look, looking at the year, here we've got Infotech is still the leader.
Yep.
Communication services is following behind 8.6%.
Yep.
And then we've got industrials behind that. We know that if the market's going well, industrials should be up 7.3%.
Yep.
Utilities up 6.2% at the moment. So interesting there. But I thought that would have actually been pushing up higher right now.
I would have thought it would have been pushing up higher too, very, very much
That's
so. But
surprising.
it's quite interesting because I actually did, this is the calendar year one, January.
Okay.
In my market report that I recorded yesterday for Talking Wealth, but people can read the text, some of the stuff on Money Magazine. If they go to Money Magazine, type my name in.
You've got an article there?
My weekly article I've got the financial year on these and the financial year on some stocks as well. And you can see some differences in that.
Great.
Which is quite interesting at the moment. But utilities, I would have thought utilities would have done a bit better than what they have done.
Consumer discretionary, that's understandable, 6% up. Still, it's a reasonable return on a consumer discretionary stock. Woolies and Coles under consumer staples are pushing that up, but only 4% because we did see some big declines in those stocks prior to that. Materials, 1.25% up. It's more or less flat, and we've been waiting for BHP and Rio to do something. Go down, go up, we don't care. What is that? But,
I know.
Just do something.
And financials down 2.95.
So we've got energy, financials and healthcare are way behind at the moment. So these are probably the four areas to watch, really, aren't they?
Correct. Well, that's why I said I'd like to say energy, but I wanted to say healthcare, financials and materials as well.
Just
cover my bases. So, but yeah.
Yep. Well, there's plenty of stocks there, obviously, because it's most of the market.
Well, it is. And when you're looking at stocks like CSL and you're looking at Cochlear, they're setting themselves up for a run. In healthcare. When you're looking at financials, there's a couple of big banks that are looking super right now.
Looking interesting, but not moving,
No, well, they're not moving. And there's the same in the energy sector. There's a couple in there. And materials. There's a few stocks in the materials I really do like.
I saw on Channel 7 they had a section about dividends, which is our topic for tonight.
Yep.
But they were looking at a lot of the stocks that are paying above average dividends, which is interesting. Financials, of course, have been the big dividend payers.
Yep.
Materials over recent years are paying much higher dividends than what we've
Correct.
seen in
Than
the
they were.
past. And there's some really good energy stocks that are paying as well. So it's not, these stocks could have a huge comeback, but it's not just the
So what's your pick for
capital
the
growth
next
that we're
3
looking
to
at.
6
Is it?
months in that, which sector?
I would actually go for the materials sector always for growth.
Yep.
Financials, I think, will be behind materials, but we'll still get some good growth out of that over time.
Okay, so they're your 2 picks.
Yep.
All right.
All right, that is it for our thoughts on the Australian market sectors. Coming up, we've got some great stocks, including PPT, Orica and MP1, and we've got an ETF to share our insights on with you.
Okay, now Janine, let's get into our first email for tonight. Okay, Janine, our next email is from King, who says, "Hi Janine and Dale, wondering if you could have a look at Perpetual for me. Specifically, how does technical analysis usually consider a large spike and fall in price, which is related to corporate action? On the chart in November last year, price ran up and then pulled straight back into the downward trend. This was a failed takeover proposal from RPL at the time. I've just been watching this one and do not own the stock yet, as it has been going sideways for the past 6 months, but I'm keen to get your thoughts. As always, keep well. Cheers, Kay. P.S. I'm desperately waiting for some more of Janine's jokes."
And you're not.
I'm not that desperate.
All right, shall we talk about the stock then rather than my sad
Well, we don't need to talk about the
jokes?
stock. More so, we need to talk about what happens when you see these sort of takeover bids and you see
First
this
of
big
all, I
rise
think we
up
should
and
show
back
it, what he's talking
Well,
about,
we
because
can
the
show
picture
it.
tells 1,000 words. So probably the weekly chart's the best place to have a look, and I put a box around
Yeah.
the area that he's talking about. So you've got these 2 strong weeks up where the stock, now let's just have a look at it in percentage terms, where the stock's risen from all the way down here to it's a 40% rise on the shares in 2 weeks.
Obviously, there was a takeover and announcement.
I think this is great for the stock from the point of view that sometimes when you get a takeover announcement and like there was the issue with Costco, remember originally I think it was, and then there was Vocus that had initial takeover, so and then eventually the takeover
Well,
occurred
Vocus had
again.
a few of them.
Yeah, it was a few of them,
about
but
3 of
after
till 3.
after the first one failed, the share price plummeted, and that's often what happens. And we saw that with other stocks as well. But same sort of things happened here. It's not a surprise to see that happen. But what that can do is actually can provide the market with some sort of indication of what the share's really worth.
Correct.
So if they were prepared to pay somewhere up in the 30s for the stock, it means right now that this stock is trading in the 20s could be an opportunity, at least in the short term anyway.
Well, that's sort of what King's really saying, is saying, well, how from a technical perspective should we look at this? Now, whilst all that big spike, we need to keep in mind in terms of a technical analysis there, because obviously, as you said, somebody's saying, well, we think the stock is worth this much and it's trading here, and it just jumps up to that point.
Yeah, exactly.
So obviously, what is it worth? But
So,
it's still trading well below that point, though.
Given that he's asking about the technicals, we have to go back to the long term, and I so like the look of this.
Yeah.
Right, this is a huge long-term basing pattern now. Incredible support for this stock to rise from, and I don't know. Look, we can't say that they always go up from these sort of levels, but look, it goes way back to what, 1999.
Yeah, but I mean, at the moment, he's still watching it, which he should still be watching it, because it is finding some support. But it's just on this downward sort of trend, isn't it? Really, at this point in time, which is what he's sort of talking about there. But right now, that high from that buy or that possible takeover is all part of this whole downward move. So it doesn't surprise me to see it hitting its head on what is this line through here. But right now, I think if it gets some bit of support and proves that that low is that's the last low, then I think it could be rising up and it could be a buy in the next 6 months.
It could be really interesting.
It could be
really
nice.
The interesting thing from a technical analyst point of view, and this is one of the things to debate, I guess, is that originally the trend was down on this angle. And the takeover actually broke that line and it took off. So then how do you treat that? Like you and I would have to then take into account that high as part of the trend. But in reality, that's sort of an aberration, isn't it? Because it was
It is a bit of an aberration, but we still have to take it into it, yeah.
So in reality, you could say if if you sort of argued the point that it is actually trading above the angle of that original decline.
Yeah, but I wouldn't be getting into a stock until it broke through this line anyway. I'd make sure it found some support, really showed me some strength, and then get into it.
I like the fact too that there's been this reversal on the monthly chart. There's a nice strong reversal happening there. Not like this one. This one was really weak. You can see that angle there. That was a nice strong reversal, much stronger than before. There's a reversal here. So I'm just looking at that, and I think, you know, another move up, and it could be a short-term opportunity, but more medium to long-term investors wouldn't be looking to buy it until it's proven it's going to break that line.
Cool.
All right, for those watching tonight's show on YouTube, this is your chance to join in and share your support for the show. And you do that by hitting that subscribe button. Whilst you're there, hit that like button too, please. It's easy and completely free, but helps so many like you to find our content.
Now, Janine, I just wanted to share, we had a big response to the offer to access a private link to watch my analysis of the top 20 stocks. And we released it last Friday, as I mentioned a little bit earlier. Now, if you missed out on that or getting that link, then you can subscribe to talkingwealth.com and you'll be able to see that. So if you already are a subscriber to talkingwealth.com, you automatically receive access to the recording as part of your subscription. So remember to check it out, as I'm sure you'll be surprised at some of the analysis that I put on those charts. And in the recording, I've shown some advanced along with some more basic analysis techniques. Now, we've got a text come in from Andrew, I believe, and he's asking about CSL. Andrew's saying, thought on the current trend. He said currently down 6%, not concerned, but thoughts. So Andrew's asking our thoughts on CSL. So what do you think? If you want to be like Andrew, please send your text with the numbers on your screen, but also you can give us a call on 92909988. Pick up your phone, give us a call now. We'd love to chat with you.
Now, we don't know where Andrew bought. He may have actually bought back here somewhere. We don't know. But
I don't think he said he bought, did he?
Down 6%.
Yeah, no, he said it's down 6% at the moment.
Oh, okay. Well, it looks compared to what, though?
I don't know.
So I took that as his position's down 6%. But
you may be right. You're normally right.
Do we want to argue that, or do we want to get into helping
You're
Andrew?
always right. I'm never. Let's move on.
All right. Okay, so the point is...
It looks shit.
It looks... So I wasn't going to say that, but yes, it does look terrible. That doesn't mean it couldn't come back. There's always a possibility. There is this really strong support line here.
I like the monthly chart. It looks awesome. But weekly it looks shit.
Okay, so the angle of that trend is... Can I just explain to everybody what you mean by that?
Yeah.
So the angle of the trend has actually been broken, and that's the problem with the whole thing. Whether it comes back now, it might just come back up and go down again. That's the problem with part of these falls. Let's just have a look at. There's a humongous gap there.
Massive.
You know, higher up for it to come back up and fill at some point. So it may do that, but it's a catch a falling knife sort of scenario. If you're already holding it, you know, there's so many reasons why you would have been out of this stock. However, you know, if you're still in it at this point, I'd just be watching to see if it turns around in the next week or so. If it doesn't, I think you just need to draw a line in the sand and decide what the risk that you're willing to take. He might have if he's down 6%, if that was his position, then he may have a 15% stop loss.
We don't know where he bought it from if he's down 6%, because he could have bought it at any of that period in the last 12 months.
That's right.
And be down 6%. But just make sure you've got a stop loss on it, mate. Now we do have a question, Janine, while we wait for more texts and phone calls. Now this question is from William. He says, hi, Dale and Janine. I know you don't like ETFs generally, but there's this one with the ticker code ASIA, or Asia, run by BetaShares. It's comprised of the top Asian tech companies, and I'm thinking it may have bottomed and be a good buy soon. Regards, William. All we don't like, I keep saying I don't like index ETFs. That's pretty much what I keep saying. So it's not all ETFs, it's just index ETF. Why do people think I hate all ETFs?
I don't know. It's probably because he gets on his soapbox.
I do, but index ETFs don't like. Specialist
Maybe
ETFs,
they just like to rev
mind.
you up. Good on you.
They do, don't
keep
they?
writing in the same.
Okay, I'll shut up and then you can have a look at this. How's that?
I think you are absolutely right, William.
Yes.
I think it looks awesome.
I'll put my glasses on. Oh, that looks pretty good, doesn't it?
Doesn't it?
Remember on Talking Wealth we did an interview with Chris Tran? Well,
Yes.
I did anyway. And he was talking up Asia. He's in Singapore. He's a very smart person in Singapore that I've known, both Janine and I've known for 20 plus years. He's saying Asia, 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 and tech Asia. So he's very much excited about what's going on. So this is a reflection of that, isn't it?
I think he's right. Do we need to say any more?
Well, you can say some more if you like.
I mean, look, it's just a beautiful downtrend. That's what
Well,
I
William's
see
asking,
straight
is this a
away.
buy soon?
It is a buy soon, I would say, but I'm just not going to...
So not just yet?
Yeah, you need to pick your rules, William, and just be very selective about those rules that you use. However, I mean, that looks really lovely. It's actually trended up nicely to this point here, little downtrend, testing that low. Often these pullbacks test the prior low to see what the conviction of the buyers is, and if it starts to take off again.
I like it. I think
nice.
he's done well. I think William's done well to pick that. I don't have an issue with this ETF.
Very nice.
If it was an index ETF, I would, but this one I
All
don't.
right. Our next email is from Dylan, who commented on a video he watched on talkingwealth.com as Dale, I believe you challenged everyone to watch some videos other than our stock market ones. After seeing his email, I thought it was something we should share here as we can all learn from it. Dylan goes on to say, I thought I would share what I learnt this week from watching a video on Talking Wealth about getting unstuck. The acronym AWTAF relates so much to trading the market. When your stock drops below your stop loss and you don't want to admit you're wrong with your analysis, admitting you messed up, cutting your loss and learning from that mistake is the best way to move forward. All too often I've watched a stock drop away and my pride gets in the way of me following my rules. Mistakes are part of learning, even when it's hard to admit when you make them. One of many great videos on Talking Wealth. Thank you for your content, Dylan. There you go. That's
great,
very
isn't it?
nice, isn't it?
Yeah, and I get emails every day from people emailing in about what they're learning from, you know, from those different videos. But obviously some are relating directly to trading like this one was, and some of them are directly relating to other types of things, whether it's psychology, investor psychology, those sorts of things in other areas. But he's so right, isn't it? How many times are we teaching traders and they give them stop losses and exit strategies and that, but then when they get into a loss situation, that whole self-talk happens about, you know, if I get out and I'm losing money, then I'm wrong.
It's
and having to deal with that.
Some people are really quick and they just take the loss and they do it.
But
But other people are not so. And so why is that?
It's simply because of that whole thing of some people run from a motivation, or not a motivation. They have this big lie that I'm never wrong, right? And they may not be aware that that's how they run. And so...
Is that an ego thing?
No, it's not an ego thing. It's just, it can be a man or a woman, doesn't matter. So some people, I must be always right.
You thought I was meaning
And some people, I'm never wrong.
Yeah.
And so what it is if a stock falls below a stop loss or doesn't do what you expect it to do and you lose money on that as an exit strategy, are you wrong in your analysis? Were you wrong in buying it?
No.
And you're not. So in my mind, you're not. In your mind, they're not. And we're experienced traders. But I can understand somebody who has that big lie that they tell themselves, which we get from a lady called Rini Cavallari, who we've interviewed a few times.
Oh, she's
for
great,
Talking
isn't
Wealth.
she?
She was awesome. And it's just because they're running on that. That means they struggle to sell because they think that if they sell, that validates that they're wrong. They weren't wrong in the first place. If you bought on rules, sell on rules, that's what you do. It's win or lose. And trading is about trading well.
I think you're missing one thing, and that's about probability.
Yeah, correct.
And you know that there are going to be losses, and that's the stock market.
That's the stock market. But
Now,
anyway, that's my 2
Thank you for
bits.
that. That's awesome.
My pleasure.
Before we get into the topic tonight, my quote this evening is by one of the greats and one of Dale's favourites, motivational speaker, teacher and trainer Zig Ziglar, who said, "The first step in solving a problem is to recognise that it does exist." Many of you may have already recognised a problem that you have in your trading or investing, which means tonight there's an opportunity to solve it, especially if you ask us to help you. Regular viewers know that's exactly what we do in our shows.
I love Zig
Your
Ziglar
thoughts?
quotes. I think it's perfectly true because they say awareness is the first step in change. So if you're aware you've got a problem, then you can then make an intellectual decision to go, do I want to keep going that way or can I change that?
Exactly.
And then you make that decision to change it. So I love your topic.
I thought you'd like that one.
I'm trying to keep
was
that
for you,
one.
actually.
I tried to keep that one under 30 seconds.
I'm just trying to sort of, make friends again
Oh, okay.
after last week.
I'm always your friend. I may not look like it all the time.
All right, now tonight's topic is on the high priority list for most, and that is finding great dividend yielding stocks so they can get income. We know some of you are counting on your high dividend stocks to keep paying, but is this wise? We'll answer this shortly, and then we'll reveal our top stock picks for dividends. A question that some of you may have at the moment is whether now's the time to sell some or all of your stocks to pay down the mortgage. In just a moment, we'll answer that very question.
Well, that one sounds great, Janine. Now, I'm looking forward to that one. Now, we all know that great dividend stocks can underpin a portfolio, but they also must have the potential for capital growth. I know that's one of the criteria. Now, or if they don't, then they can drag your portfolio performance down.
Now, you're so right.
Always.
And that is why you're going to love this list of stocks that I have. Before we get into that, some people have told us that they're concerned about higher interest rates and the pressure of rising borrowing costs. They're asking, should they sell their shares to pay down the mortgage?
Well, I think they should be looking at that, because the thing is, you can always get a redraw. They've got a non-tax deductible debt, and if you've got lots of money in shares, you could decrease that and automatically go to the bank and borrow more money on using your house as security, get your shares back and make them a tax deductible debt.
Yep.
Which is a pretty smart idea.
So how do they do that?
I'm not going to tell you.
That's for another show.
It's going to take me longer than 30
You're
seconds
going to get
to
lots
talk.
of questions
I'm
now.
going to get lots of questions, but it is. I mean, it's smart. I don't have non-tax deductible debt. It just doesn't make
comment
sense.
below after tonight's show if you want to know more about that
Dale,
one.
show me how to do that.
Yeah,
Cool.
Exactly, Dale. So we ought to share what they need to know first, shouldn't we?
Yep.
So stay tuned, everyone. You should know, don't miss it, or I can guarantee you'll be kicking yourself. Now, Dale, let's take a look at a couple of charts of the All Ords to help explain.
Okay, so where are they?
All right.
You got to bring them up for me.
They're here.
Oh, okay, cool.
Ready to go.
All right, so what are we looking at?
All right, so now we're looking at the right and the wrong times to sell. That's what the discussion is, right?
Okay, so we pulled this from a presentation we did recently.
Yeah, now this is not just from a presentation we've done recently. This is what we've been talking about for years.
So this is in my book too.
Yeah, it's probably in your book too.
It is.
So if we're looking at, this is really a whole, I guess, a cycle on the market. After the 87 crash, there was obviously a huge correction. The market goes into potential recovery and then pulls back. So we're talking about what's happening in the phases of the market unfolding, and then the huge rise over time. It took a long time for the market to get going, and it was in spits and starts. There was this big correction back into 95. The period of improved earnings. This is when you think the market's going right 1 minute. The next minute you hear negative news, and everybody thinks that the market's going to implode. There was the Asia crisis in the late 90s. And then we went through this period of the market trying to it was hobbling along and really not going higher in the early 2000s, a correction in early 2003, and then
That's
the
March
boom.
2003, yeah.
Then we got the boom. So, this is what happens, and typically a lot of people tend to sell right before the next boom part.
Well, they
so
do.
you don't want to be selling and miss out on this sort of a rise, the euphoric rise, the rampant speculation on the market. And then we see when the market pulls back, most people don't sell around here, which is when they should, which is abandoned hope, okay? When the market pulls back. Then there's a pullback again, and usually most of the people sell after most of the loss has already been made.
But this is where the managed funds get their argument as it's time in the market than timing the market, because they use those statistics to say, well, this is what average people do, but the people that do that aren't people that time the market.
Now, people
They're
are
just people
contemplating
panicking.
selling at the moment because obviously interest rates are rising, so the cost of their borrowings are higher. And then because the stocks haven't been galloping on yet, they're thinking, well, I'm just going to move the money across to pay off the mortgage because I'm not making enough on the shares. But the shares at the moment are paying huge
But if you're paying
dividends right now,
if you're paying
percentage-wise.
5%, 6% on your housing loan, and you're earning easily that on the shares, then what's your problem?
Well,
but
I guess
the problem is with you're paying the 5 or 6% on after-tax dollars because it's a housing loan.
that's right.
Okay,
If
whereas
it's,
you're paying
if
tax.
it's an investment property, different story.
Investment property, different story. But if you're earning dividends, you're paying tax on that. So you need to look at that whole position.
So I guess that's the first slide. On the second slide that we're showing here, this is when the market corrected into the low in the GFC, and we had that same. You remember the phase that happened in the first slide where there was that push up and it went sideways and pulled
down
back.
into 90.
Same sort of pattern occurs, and it's repeatable over time. Improved earnings occur. We had COVID, which was an aberration, if you like. I should say. I won't say what.
Well, it wasn't a normal economic meltdown.
No, it wasn't. It was actually a lot of things which I won't go into. And then we see this sideways move that we're experiencing now. So the market's still in that spits and starts phase. It's not in that real boom part of the market yet. So I guess that's important to highlight to people that when you're looking to sell your stocks, it's at the right time rather than when the market's actually preparing to go. Is the market in a huge bear market? No, it's in a sideways market. So that means that there's got to be more. So is there something else that we need to share? Really, that's the question, isn't it?
There's probably a hell of a lot we need to share, but at the moment we don't
We don't.
Is that something for our next show?
I guess it must be.
Okay, but we do need we do need to share more, but it's a bit hard to share too much on the show because of the level that most people watch it.
It's more about the fact that when the boom happens, when everybody thinks, oh, now's the time to get out of the market, it's not the time to get out of the market.
No, now's the time to be. I've been saying for weeks and weeks and weeks. It's really time to prepare to get into the bull run that's going to be happening over the next couple of years. And whilst people are going, well, you know, you're crazy, Dale, look at the market, there's interest rates going up, they're talking about recessions, that excites me. I get the opposite feeling that most people do, and that's really what people need to be doing, is being more contrarian. Yeah,
I think that's really wise. And look, mortgage rates are likely, they could go up higher.
They're going up a little bit, maybe one.
But relative to what they've already gone up, it's not huge, is it?
Bugger all. Yeah.
All right, is that all you wanted to say?
Well, I could say more, but I better shut up.
Okay. Now, Dale, we've got some great stocks tonight, and we know good ASX dividend stocks pay fully franked dividends at or above the market average, which typically is around 4.5%, and some pay twice, others 4 times a year. We will also take a look at a few stocks paying extremely high dividends and share our view on those. Let me ask you, Dale, do you think investors have anything to worry about in this market if they're relying on dividend income?
That's a loaded question.
Isn't it? You could go anywhere with that one.
I could go all over the place. Yeah. To me, it's very much about buying a stock for dividend yield alone is just a CRAPPY way to invest. You should always go for capital growth first, and then if you get a good income, because you can always find a stock that gives you good growth plus good income, not just good income. And I think that's what they need to worry about, because there's so much volatility in our market at the moment, and stocks are getting punished on the downside. So you don't want to buy a 5 or 6 or 7 or 8% dividend only to lose 20% overnight.
Exactly.
So that's my danger.
Well, thanks, Dale. And to help everyone on the hunt for great dividend stocks, let's share this. First of all, 3 options for finding good dividend stocks. Number 1, the assumption investors often make when looking at dividend yields is that the company will pay a similar dividend next year, which is not always the case. So stick to top 20 or top 50 stocks by market capitalisation, as they're generally the most reliable. And you can find dividend history on the company's website or your broker's website to confirm that they've provided a reliable source of income.
Do you want to take a breath?
I just did.
Number 2, good software and some websites with scanning tools can save you time. Now, these programs like Optima that we use allow you to filter stocks with multiple selection criteria. Now, your selection must be aligned with your portfolio type and goals.
You were supposed to say that with a higher pitched voice, you know that.
I was supposed to say. Do you want me to say the next one?
Yeah, you can if you like.
Okay, number 3, most importantly, never buy a stock just for the dividend yield, as I mentioned before, and always use technical analysis to confirm the price of the stock is likely to rise before you buy. Now, a falling share price increases the risk that your dividends could be cut, which means you risk giving up more of your capital than you receive from the dividends.
That's interesting, isn't it?
Well, it is. People don't necessarily consider all those different points.
So what do we look for when we're looking for dividend stocks?
Always, first and foremost, is we focus on growth first. That's what we're looking for. And if we're looking for above average dividend yield, and you can always do a scan and find the top dividend yielding stocks. So we'll look at those, but then we look at the ones with higher market cap and then higher proper technical criteria around to making sure they're going to grow first.
Yeah, we want to
and
make
then we
sure
look
they're
at the
still going to
dividend
keep paying, don't you?
Well, you do, and that's the point. Is as you're saying, it's no use getting a dividend on one hand,
Yeah.
like Telstra falling for 10 years. People just kept
Oh,
holding
yeah.
it because they paid a good dividend, but
That's
they
right.
lost 62% on the way down.
That's right.
So
you
why
don't
do
want
that?
to be in those.
No. So that's what I'm thinking.
Okay, Dale, Market Index have a list of high dividend yield stocks, but remember, you still need to know how to narrow down the list, which is something that we teach our students every day.
So we're going to show them the market.
We are going to have a look
So
at
that's
this.
on the screen right now?
Yep, got it on the screen. So this is a really
So
quick search.
marketindex.com.au.
It's not the be all and end all, but it's just showing a list of stocks, and it gives you some of the
Well,
highest.
it's not showing a list of stocks at the moment.
Not at the moment, but look, it shows you what the scan's about. So it's saying market capitalisation $1 billion plus, so nice liquid stocks.
Yeah.
Dividend yield 5% plus, and they're ranked by
By
the
the
dividend
dividend
yield. So it says caution: a high dividend yield can indicate a falling share price, a company with limited growth prospects, a once-off special dividend.
Okay, they're
But
good cautions.
what's bizarre to me, and that is, just before we get into this, is that there are so many companies with, in the past 12 months, high dividend rates,
Yes.
right? So that's abnormal. So I just think when you've got a market where that's the case, that eventually it's got to flip to growth.
Yep. Well, you
So-
notice, can I say something quickly?
Yeah.
Of all of these, the top 10 of these, if you look down here, there's all the growth. 6 out of the 10 have negative growth.
There you go.
It's got to tell you something.
I don't know if it tells
The
me
two
anything
that have
yet.
grown, 2 of them have grown a lot, but it does tell you something, doesn't it? So what were you going to say, or are you moving on?
So just looking at these, you can see some interesting names, but what I thought we'd first have a look at is the yield. So you can see the 20s, they're in the teens there. Right down here, we've got, now just pick out something that's interesting there, Woodside Energy, 10 or 11% there, which is interesting. Magellan, which we're going to take a look at soon. Now, when you're looking at dividends, the important thing to remember is the yield can be represented differently depending on the time frame, whether the yield includes special dividends.
Yes.
And it's really important to understand what that dividend, how that dividend yield's been calculated when you're looking at it. And don't be too concerned about it though when you're going from one website to another and they're a little bit different. So that's interesting, isn't it?
Oh,
well,
that
was
was
fun. I enjoyed it too.
Right, let's go.
Okay, Dale. Now, I know that you won't bring me more Cookers biscuits if I don't hurry up, and I do love those chocolate and jam ones. So let's get into the charts and find some juicy dividends with acceptable risk. I had to mention that.
Cookers. I don't
Because
think a
we
lot
ran
of people...
out. I went to the cupboard the other day and there was none left.
I know, but I don't think everybody around Australia knows what Cookers biscuits are, because I think they're Victorian.
But I thought they were meant for me. Has everybody been
I only
eating
buy them for you. I buy
Someone
them for
must
you
have
because I
found
know
out
you
about
love them.
them.
But anyway, can
All
we
right.
move on?
Oh, yeah. Okay, let's move on. I didn't want to, but all right.
Of course you did.
We've got a list here, a really interesting list here that I wanted to share with everybody.
Yeah.
So these are actually, should we put it on the month? I'll put it on monthly.
You're in charge.
Now, if I sort by percentage change, what's really interesting is we can see Magellan's actually fallen the most.
Yeah.
We've got AMP. AMP actually, as you said today, there was some really negative news about AMP.
Well, it fell heavily last week
There's
or
a
so.
few stocks here that are actually paying reasonable looking dividends over there on the right hand side, because that's the dividend yield you can see over the past 12 months, that have actually fallen or been in negative territory in the last month. But what I'm going
that's
to
only since 1 July.
What I'm going to do is go back to dividend yield and look at the highest dividend yielding stocks, which we were just looking at before. Now, this is based on the last 12 months. Magellan Financial Group, a change of 11% over the last month, and its dividend yield's huge. Now, you wouldn't expect to get that sort of dividend yield going forward from the stock. So I'd just keep an eye on that. But would you be interested in a lot of these ones that are saying that they're 11, 12%? You wouldn't, would you, necessarily?
Probably
because
not,
a lot of them could be falling, or they...
Well, JB Hi-Fi looks CRAP.
But Rio's interesting.
Rio
because
looks
Yeah, well,
interesting.
any of the big ones that you can find in the top 50
Elders
might
is
be...
looking interesting right now. I do like that one.
Elders looks interesting as well. But look, what I've done is I've picked, first of all, Magellan, because it's not a stock you would generally say, okay, let's pick this for a dividend.
No.
Because it's falling. It's higher risk. That's not a typical... It's not
But what
the
falls
first
must
choice.
go up again eventually.
That's right, but the first choice ought to be nice, big, liquid blue chip shares. But you
agree.
might have 1 or 2 stocks in a portfolio of 12 that have the potential for higher growth in there, depending on the type of portfolio you've got. So if Magellan's paying a really good dividend and the share price starts to take off and you're able to hold it for long enough, and that's the question, it depends on your analysis. And this is where you really need to understand and have a higher level of knowledge in the stock market.
So what are you going to say about Magellan?
But if Magellan takes off and starts moving up over the next few months, then it could be a really nice opportunity.
Well, it's looking like it's found its low,
and have a good dividend as well at the same time. So I've got Dexus here. Now, generally property stocks will pay, or trusts will pay dividends 4 times a year.
Yeah.
So they split it up over 4 different payments over a year. So you need to check the information on the companies that you're looking at to see when they actually pay dividends, and you can go into the dividend history information to find that out. But this looks like a really interesting stock to me. It's just come back to a really nice level. It's trying to find support at the moment. And I think if we start to see 3 or 4 weeks in the upward direction, this could be really nice. And just going back to where we were, if I can just find Dexus in the list, and it's not easy to find, so there we go. You can see it's a really high figure, around 9.6. But that obviously is going to change as the share price moves. So, but it should still be a really good dividend on a stock like this.
It's still a pretty good dividend.
And then Stockland, we're seeing a pullback in the price. Now, I've been really surprised about how well this has held up.
Yeah.
It looks a mess on the monthly chart because of COVID and the way it's unfolded. Stockland tends to be more of a plodding stock. It's not as good as Goodman as one of the stocks in that group, and I would say Dexus probably as well. But because of government incentives, it may actually hold up a lot better over time. And if the property market starts to turn around again, which we will expect it to do.
But you know, it's had those number of weeks down, but it's looking like
it's held up well, hasn't it? Really?
Yeah, I'm just saying it's held up really, really well.
So that's an interesting one to look at. And now we've got Rio. So I'll just quickly run back and we'll just have a look at Rio again. We saw that Rio there as 11.5, that was over the last year. Now we're looking at Rio's sideways, more or less. So people who are holding the stock over the last couple of years would have been getting a really nice dividend out of it. But there is a risk in the short term of downside. If it needs to get back above $120 and push really quickly up through that level, because there's a lot of resistance around this 130. But once Rio starts to go again, it could be a really nice one. Okay. But stocks like the property trusts, big miners, banks would typically be the sort of stocks that we'd be looking at. I didn't want to pick all big bank stocks, even though they're the ones that traditionally we would look at for dividends, because we were going to do a bank. We probably will do banks again as a show, and I just don't want to keep repeating the same stocks. But Bendigo Adelaide Bank, Ben, is really a nice little, it's an interesting stock. I'm not sure whether the low is in yet. I believe that is the low, but you know, at this stage, it's still not proving either way that that's the case. So we need to see a nice move up on Ben to confirm where it's going, because there's still a short-term risk to the downside with it.
It's quite volatile, isn't it, for a bank?
It is for a bank. These second-tier banks are, but they can provide great growth and typically double what you might get off a Westpac or an ANZ. So now Woodside we talked about this on the show last week. Woodside had a really interesting dividend. It's up in the high end again, 10.87. But I wouldn't necessarily go for stocks in this top list here per se, because there's some really good stocks down here, anywhere between 4 or 5. Around that 5% mark, you can get some really nice stocks in there, even Transurban's in there. Some of the other REITs are in there. And Macquarie's down here as well, Atlas Arterial. Nice. But you just need to get them at the right time when the price is actually going the right direction. So at the moment, Woodside's trading sideways, and we talked about how we wouldn't be looking at this until it proved that it was moving up again. Now, this is an interesting... It does, yeah, look, it looks good. It's held up really well, hasn't it, compared to a lot of stocks.
I'm quite impressed with that.
Now, this is NRW Holdings, which is just one out of the box. It's one that we wouldn't generally pick for dividends because it's more of a growth type stock, but if it's paying a good dividend, and let's just have a look, NWH I said, didn't I? Can you see that on the list here? We have to find it. NWH, no, I've got to go back up the other way, I've gone the wrong way.
You know that.
I know, but it was just here, I saw it, there it is. 8.37, so, and if this stock takes off, it's got a bit of resistance up here. We need to see it march in the upward direction. But I wouldn't keep holding a stock like this just because it's paying a decent dividend. If it takes out that low there in, is it June? Then I would just say goodbye to the dividend and be just comfortable that you're hanging on to your money.
What's fair distance to travel to get down to that in percentage terms?
So there is, but yeah, not only that, if it takes out that low, you just don't know where it could go. But the angle of that rise is just really nice. It's just, if I can just show this angle up here, it just seems to be respecting the angle of that move, and we just need to see it take off from that level. So that's really the list of stocks that I had for dividend stocks, preferably the bigger stocks in the top 20 or 50 are the better ones to have.
Yep.
If people are looking for property trusts, they can be good because they spread the payments out often more.
If they were looking for more regular dividends.
More regular dividends rather than just twice a year.
Yep, look at those ones.
Those ones,
because obviously at the moment the market's down a little bit, so and I'm expecting it maybe another 2 to 4 weeks down before it finds some support. So there's plenty of time for people to start to plan to get into some of these stocks if they start. I mean, I think the list is pretty cool.
Yeah, we've got some more to talk about, obviously. After the break, we've got a few more stocks that are interesting.
We've got some more for our Talking Wealth subscribers at the end. Okay, so that is it for our topic for tonight. Now, for those watching on YouTube, if you are interested in building your wealth, then consider subscribing to talkingwealth.com and you'll get access to hundreds of interviews with experts from around the globe. Now there's a free 7-day trial waiting for you to subscribe by visiting talkingwealth.com. Now Janine, before we get into more stocks, I think it's time we get into your famous What the segment.
Have you ever heard the saying, boys and their toys? It conjures up all sorts of images, doesn't it? Even I said, what the, when I read this one, so I'd like to share this with you. Let's take a look. The title reads, How to Blast Rocks and Negativity into Prosperity.
What?
Yeah, how to blast rocks and I don't know.
Blasting rocks and negativity into prosperity.
Yeah, I know. Is it genius or just dumb? I don't understand why they chose that image either. The title made me take a second look, but the image was disappointing. It was just a man and a woman having a chat. There's a huge mismatch here, and I wanted to see blokes in overalls and rocks being blasted into oblivion.
I'm thinking
Where's
of guys
the blokes
with cannons
in overalls?
and stuff like that blowing stuff up. You know, geez, that's what I'm thinking. You know.
Where's the blokes in the overalls? That's what I want to know.
I don't know. They don't even have to be in overalls for me. They could be in army gear and tanks blowing stuff up. That's what it's conjuring up to me.
Now, what I found out, Dale, was that these days most people don't respond positively to images of things being blown up.
They don't?
Surprise, surprise.
They don't watch Top Gear, do they?
That's right, they're missing out. And I feel like that we went a bit off track there, but would you like to know what did excite me?
I never know what excites you, Janine.
Well, the article was from Yahoo Finance covering an interview with Sanjeev Gandhi, CEO of chemicals and explosive giant Orica, who talked about Orica's tech. Now, they've advanced AI digital tools that can accurately determine what's underground, so this can increase the accuracy of drilling for precious metals. Now, to me, that's really exciting.
So they've got technology that can figure out what's under the ground before they blow it up.
Exactly.
Okay, that sounds good.
Doesn't it? Big boys' toys that could mean smaller explosions. That's really it.
Well, it means if you're going to do that, that means you don't get your big digging, drilling tools and stuff like that out.
I know. Have you seen the size of the wheels on those trucks? Anyone who's watching tonight who's out there in the mines, you know, we understand where you're coming from. Wouldn't it be exciting to just drive those things
they've got
around?
big nuts on those trucks, and some of them actually drive them.
Yep, we won't say any more. What the? I'd say. That's all I can say to that.
Okay.
Now, you have me saying it again. There is more.
There is more.
Mr. Gandhi says a new resource can be found and its quality identified without drilling or having to send samples to a laboratory. Now that's impressive. Yeah, and should make the Greens happy. That was all fine, but what got my goat is this. He said emerging producers should be supported with subsidies.
So he wants us to pay for the technology.
Exactly. What that, like if it's really worth digging out of the ground and if it's going to make money, why should we be...
They should pay for it themselves.
That's right. We're allowing them the licence to actually get it out of the ground and make some money out of it.
Sounds like a consultant to me. They send you a bill get you to tell
Well,
them what
he's
you
an
know?
engineer, but I thought he might have been an accountant because that's what accountants used to do to
Oh,
engineers.
they're taking your wallet at the same time.
Yeah, exactly.
Jeez. Okay. Well, that is it for our What The segment for tonight. Now, time to call us on 92909988. That's 0392909988. Please pick up your phone and talk to us now. You can also text your question to the number on your screen, so make sure you pick up your phone and get in there to call us. Now, the numbers are on your screen, so please do that. We wait your call.
Whilst we wait for your text and calls, we'll get into the next email.
Now we have a question from Jack, and Jack says, hello everyone, can you please give me your thoughts on Accent Group, which has the ASX ticker code AX1. This is the first stock I've analysed and back-tested outside of the course material whilst studying Module 3 of the diploma. The stock looks to be in a steady long-term uptrend lasting multiple years. I believe it's nearing the end of an aggressive short-term downward move. Now, over the years, the stock seems to move up in price from about July, August to April or May the following year. I think a good entry rule would be after the stock breaks above a downtrend line. I'll be watching the stock closely in the coming weeks. I love the course and technical analysis. Jack.
Well, Accent Group, interesting choice. Yeah. I'm not quite sure why they would pick this. Jack would pick this as his first stock to look at.
It's quite volatile.
Isn't
I
it?
wouldn't pick this one.
No.
Not as the first stock to opt to.
But I thought I'd have a look at what he's talking about. Firstly, let's just have a look at the monthly chart, because we can see that it looks like it might be finding support, as he said, so well done with that one.
Yeah.
And then it's just a question of, is it more likely to keep falling? And we won't know that for a while. It may have found support, but it's going to be potentially a couple of months before we know that.
That was 7 months straight up, and then May went down strongly, June was down strongly, and so far it's holding for July. But yeah, that's a massive, massive move.
Well, what
isn't it?
I find really interesting is if you look at where it was trading back prior to COVID, all it's done is go right back to that level.
Which is a lot of stock did that.
Yeah, that's right. So now let's just have a quick look at the weekly chart just to check what he's talking about with these rises. So he's talked about rises from around July through to the following April or May. So we've seen one here.
Yeah, I like
and we
that.
saw a rise from here around June, July through to early in the year, April.
Yeah.
But it doesn't quite fit with this one. So here's July 2021 and it fell all the way into the early part of the year.
I think he's on the right track because obviously stocks will go through cycles. So whether that's from low to low or from what we're talking about here is they'll have periods in the year where they're more bullish and more bearish. I do like his thinking in it. May need a bit more back testing on it, but it's not necessarily a solid theory for buying and selling either. It's just where to watch out for possible peaks in the marketplace. But he's talking about, obviously there's no downtrend line on this stock at the moment.
Yeah, so he's going to have to wait a while to get a trend line.
And the thing is, because it's so volatile, it's a little bit harder to do your trend lines on. So, because how do you do a trend line down there into that COVID low? You probably get one down through here.
But you wouldn't get one further up in 2000.
But you wouldn't get one up through here. So I think it's a tough stock for him to be picking, like you said, for his first stock to back test from the course. I'd be picking something a lot more liquid.
That's good advice.
For doing it. But at this point in time, I think it's a long way off buying on a trend line. A long way off at the moment, but that'd be my take.
But great that he wrote into us because it is interesting. Look at the fact that it's just, and to me this is really good for investors to see because it looked like it was moving. There were probably good reports about it. It had taken off. I mean, it had gone up. What percentage is that from this low down here? It had gone up 120 odd percent, 130% maybe. And it just wiped the whole lot out in a matter of 1, 2, 3, 4, 5 weeks. Most of that rise had been wiped out.
Yeah. So again, it's a good trading stock when you've got the knowledge and experience to do so. But I think you need to probably, for your first stocks, I think I'd pick some different stocks, mate. I really would. But thank you for emailing in and taking that first step to email into the show. So we do appreciate it. If he's in module 3, when you get into module 4 of the course, you'll be able to send your emails through to also an additional service called Trading Essentials, which means you'll be able to send your trading plans, your stocks, your analysis into the team to help you work out where your best entries are and help you work
And
on
you get to
your back
watch
system.
every week examples of us talking about stocks and how we trade them and the analysis that we apply to them. So you are going to love that. So make sure you use that service really well.
You get that as soon as you get into Module 4. So once you pass all the stuff in Module 3, you'll get that. So, but Janine, while we wait for... Remember, text us on the numbers on your screen. Pick up the phone, 92909988. Please give us a call. We'd love to chat to you, or please send us a text to the numbers on your screen. We now have an email, Janine, from a guy called George. And George says, "Hi, Dale and Janine. Hope you're both well despite the cold Melbourne weather. It's been beautiful in Melbourne the last few days. I've been walking around just in a thin jumper looking at the beautiful blue sunshine, mate. I'm a beginner investor and am very appreciative for all of your informative shows on Talking Wealth TV. I have read Dale's first book a couple of times and I've started the second one. I'm looking to enrol in the beginner course in the next couple of months. I was wondering if you could have a look at MCY for me. I'm not in this stock, but it is one I would potentially get into at some point. I think it would be a good company to get behind. Hopefully, with some good growth and income potential. It seems to have great fundamentals. They generate and provide 100% renewable energy. As I'm a beginner, my technical analysis is poor. However, it looks like it has been in an uptrend since October 2022 or so. Do you think this may continue? Thanks for all your top quality shows, George."
Well, thanks, George.
I'll stop talking and you can talk now.
That's an awesome email.
It is an awesome email. I think it's fantastic.
Now, just have a look at that beautiful trend, and it keeps coming back to respect that angle all the time.
That looks good, doesn't it?
The thing we don't know from a pattern point of view is whether it could turn down from here, but it doesn't look like it, does it?
No.
But if it took out this low here, I can see it on the weekly chart there, I think it's in June, then I'd be a bit concerned about where it's heading, but in the short term at least. What I've noticed that was really interesting here, I'm going to expand this up, is that each time it's had a rise off a significant low, it's gone up more than at least 90% anyway. And in this case, over 148%.
So that's what you're thinking it could do.
So, well,
so to answer George's question is yes.
Yeah, it's funny, George. What's really interesting about technical analysis is you think you see things 2 or 3 times it's happened, and then the next time when you think, oh, it's sure to do this again, it doesn't.
Yep.
And that's because of a big picture pattern that's there that's having an influence on the way that the stock's unfolding. But, just to keep it really simple, I would say there's a potential for it to get up to around $9. However, we just need to see what it does in the next couple of months to see if it can take out that high there of 622. If it can, then it's got a really good chance of challenging that all-time high back in
I like it.
January 2021.
Just basically because you haven't, you're not highly experienced in technical analysis, as you mentioned in your email. I would, if you do end up buying this stock, just make sure you set a stop loss on that stock. Please do that. So that while it moves up, and while it may move up to what the areas that Janine said, as she said, there's probability it could get to that point. The problem is if it comes down, not if it goes up. So you're never going to worry if it's going up. If it comes down, you make sure you've drawn that line in the sand to make sure you exit from your initial buy price, and then look at a trailing stop loss. Because you've been reading my book, you know exactly what we're talking about there, because they are in the book what you should be doing. So please jump in. Make sure if you do jump into that stock, you do set your stop loss and stick to it, because it could, as Janine said, it doesn't always have to do what we expect it to do. So just make sure you predict that downside. Anything you want to add before I move on?
I think that was really good.
Okay.
Good
now
coaching.
we do have an email from Sim, and Sim is asking, "Hi Dale and Janine. I've been a regular viewer of your YouTube show." Then you should know that it's Janine, not Jenny. But our YouTube show since 2019, and I wanted to reach out to you with a question. Well, thank you for sending your question in. First of all, I want to say that your book, which I purchased back then, is really starting to make sense to me now. I have a specific query regarding significant gaps in tech stock names like MP1, Xero and 360. Currently, these stocks are trading at over 30% of their gap. I'm somewhat hesitant to invest due to this gap. While I managed to enter at a good price, I'm concerned that I didn't hold enough shares to fully capitalize on this opportunity due to gaps, though it will come back to the same price again. I greatly value your expertise and insights in this field, and I would be grateful if you could provide any advice or guidance on investing in stocks with such gaps. Your input would help me make more informed decisions. Thank you for your time, and I look forward to hearing from you. Yours sincerely, Sim. Did you get all that?
Well, it's all about gaps, and it's all about whether to buy more. And it's like when you buy a stock and it goes up, and then you realise maybe you didn't buy a big enough position.
Well, that's the thing. It's like that's why you work all that stuff out beforehand. So it's like some people go, oh,
I'll only buy a little bit.
I'll only buy a little bit, and then they goes off and they go, I wish I'd put more into it. And they go, well, I'm
And sometimes that's wise too, because it could go the other way.
But one of the questions is, it's like, you know, if I've got
you do say,
to make it worthwhile.
Just to clarify, you do say to people sometimes you might put less in something that's more volatile.
But a lot of people go, it's like, how many times have you said to somebody said to you, they want to trade a leverage product like a CFD or FX, and like you go, why? And they go, because I might make enough money out of the stocks because I don't have much money. And I reckon that's a CREP answer.
Okay.
Because it's not about that in initial stages, because they think, oh, I've only got 5,000.
It's learning.
It's
so much more important.
That's so much more important than making any money at the moment. It's about, because they go into these leverage things, or they put too much money into something that they shouldn't be, only to lose it all or most of it, and then they get a big learning experience. It's quite costly. So I wouldn't worry about that part of it if I were you. I'd be more worried about...
I'd just be happy to take the win based on whatever you've got, and it was a good call.
As long as you've got good strategies. Now, we're going to talk a bit about MP1 with the gaps on that.
Yeah, but before we do, let's just have a look at this weekly chart first, just to understand what the stock's done. And it looks beautiful, doesn't it? This nice move up that we've just seen on the share price. It has a little rise off the bottom, sideways for a couple of weeks, and then it rose up sideways again. So it might rise for another week or so, and then we'll see a sideways move again.
Now, on that weekly chart, I can see one gap. That's it.
Yeah, it's not the weekly chart, it's the daily chart that's got the gaps.
Why I'm saying that is because he's looking at completely the wrong charts then.
Yeah, okay.
Because based on his question, he doesn't have a high degree of knowledge. And so, and I'm not, it's nothing to be rude.
And he's waiting for the price to come back.
And he's waiting for the price to come back. And so he's looking at daily charts and gaps on daily charts. And he's looking at completely the wrong way.
Yeah, the other thing that people do that can sometimes bring them undone is when they buy a stock, then they look to buy more into it. Yeah. And they don't add with a risk in mind. They add with trying to make a profit. So it's greed ruling the decision rather than being very... I mean, I guess risk sensitive and looking at it from a risk manager's point of view, which is so important. So I guess this stock, for a start, it's a higher risk stock.
It is a high risk stock.
So generally, you might want to put smaller positions into stocks like this. Yep. And more often than not, you're probably going to be in them for the short to medium term, not medium to long term.
Yeah, just to explain this chart, this is optimal. We'll put gaps on the charts for you. So if they're red, that means it's a downward gap, and if it's green, it means it's an upward gap, and the width of the line tells you how much percentage terms it is. So that was the big percentage term. That was bigger here than that one. That's what it's telling you. But as you can, generally you'll find gaps will fill. Like there's a little one here that we put a filter of 5%, I think, on the gap, must have been. It filled that one and that one there, but he's waiting for this to come back. This is this week. So that's just this, that's today, isn't it? I think. Yeah, that's today it did that. So he sent the email through before this at this point in time. But look, I'm not sure whether we helped him. Did we help him?
Look, I mean, it's really a question that he's got to work out the answer for himself.
But I don't think, if you're trying to trade on gaps and worry about gaps, then you need to be highly experienced.
I thought it was just that he was hoping that the stock would come back.
And quite often they might.
And so he could get it cheaper, but it might not.
But it might not. That's the point. And you need to put a lot more other analysis around it to make sure that you're actually buying at the right point.
Yeah, exactly.
And also managing that the right way. So it's not an easy question for us to answer.
I mean, I'd be really just stoked if I was him that he's actually picked it.
If he's
it's
picked
gone
that
up like that beautifully, and now you just ride it, because it's not just that little bit of financial incentive, I guess, that you got. It's the psychological incentive that you got.
I think it's great.
But then sometimes it can be a false positive, if you like.
Correct.
Because it can give them a false sense of their own self, in the market.
Yeah, I think, there's that whole behavioural finance. If they make money on something that they may not necessarily have good rules on. It gives them a false sense of security, thinking they're more experienced, more knowledgeable than they are.
Put the money towards getting a course, you know, for yourself. That's what I would do, doing one of our courses. And then you would be able to learn how to get into this stock at different times and how to manage your risk better. That's really what's important. Well, that's all we have on MP1. We hope you've enjoyed our show on YouTube. For those watching on Talking Wealth, stay tuned for your bonus content. For our YouTube viewers, now it's time to show your support for the show. And this means that you need to comment below, give us a big thumbs up and make sure that you're a subscriber.
In next week's show, we take a look at some of the hottest AI stocks and ETFs to buy in 2023. We'll also answer your questions, take your calls, and so much more. So put next Tuesday night show in your calendar. Now it's your turn to talk to us as I pose the question. Where do you see the Australian market heading for the remainder of the year? Comment below and let us know what you think. And whilst you're there, smash the like button by giving us a big thumbs up. And remember to subscribe to the channel.